Marc Ostwald from ADM Investor Services International, with some thoughts on the oil markets, above all, the oil markets as a proxy for the global recovery, which is obviously, there's a combination here at the moment of hopes for the future, thanks to the gradual distribution of vaccines, and on the other hand, in the short term, rising infection rates impacting on activity overall, restrictions on movement and restrictions on businesses, as has been well seen in this week's services PMIs, above all in the euro area, though the United States was encouragingly strong. Be that as it may, the combination of the vaccine hopes and the official move to transition to the Biden government has seen oil prices, as per my first chart today of the WTI oil crude future, spike higher. We're now well above the $45 mark, and well above the levels which we reached at the last peak back in August. When we had also some optimism about the global economy. And indeed, it's perhaps well worth looking at some of the details on this, because it's not just a matter of front-end speculation. If we have a look at my second chart, which is the WTI curve, what one can see is there's been a considerable tightening of the WTI curve. Basically, people assuming that a lot of these price increases are here to stay, and factoring in them into prices further out. The third chart is a very similar sort of story. This time it's Brent, and it's the differential between the front month and the second month of the Brent futures contract, which has gone into a so-called backwardation, i.e. there's a premium for the back months as opposed to a discount, which would be the normal contango situation which prevails, which again suggests that there may be a little bit of shortage of supply. Well, talking of supply in that context, it's well worth having a look at the latest data that we've got on storage. And there are different stories here, and it does really sort of underline the point, I think, with these last two charts, that it's really what you want to make of it. How much of a focus on the short term do you want to make? How much focus on the longer term perspective? So the first chart is of global floating oil storage. The data comes from Vortexa, and as one can see, the white bars on there are the floating oil storage in 2020. The blue ones, the much lower ones, are the ones for 2019. So as much as one can see that there's been a very sharp drop in oil storage, floating oil storage usage in recent weeks, and particularly sharp this week, down 7.7%. The fact of the matter is it's still 108% higher than it was a year ago, which basically says that the oil market is still really rather well supplied. And also, I would add, in terms of the sharp drop that we've seen, is a lot of that is slightly distorted by China, which, as we know, was a big buyer of crude back in after the sharp price fall that we had back in April, and kept a lot of it in floating storage, and is only gradually bringing it back on shore. So that basically doesn't really sort of, it tells us that we're well supplied, even if the picture of a drawdown is actually quite encouraging. The final chart, however, is a more interesting one, because it's about the US Cushing inventories. And as one can see, as much as the floating oil storage in the world has been going down, what this shows is that inventories at Cushing are actually getting towards the sort of capacity levels. Capacity use is now around about 81% that they were before we had the big drop in oil prices back in April. So a positive story in terms of outlook, but nevertheless, there are some signs there that we may not necessarily have quite as positive a backdrop as people think. And those are the thoughts for this week.